Well, good day, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Thursday, and we're at the 12th of December, 2024. Wow, what an interesting day. Stock indices got hit rather hard, and you did lose the bullish embedded reading in the SPY today. Now, that's on the daily. The weekly chart has kept it nicely. So it's all how you're going to play it. I know I was telling clients to nibble at this at the 604.25 area, but when you lose that, you got to step back if you're adding positions. Core positions, I'm not convinced you do that. When I looked at the rest of the market today, GM up a little bit, as you can see. UAL down $3, all right. Uranium still stuck. You know, a lot of people don't think they'll get anything off the ground yet. I was watching President-elect Trump on the floor of the New York Stock Exchange. He was talking building nuclear sites. Again, Boeing up. So a lot of the non-believers in that trade, they're now saying, okay, maybe the worst is behind it. I think so. I'm watching ARKW. Look for me to start covering that, probably for the weekend. Because that's one of the darlings that's got all those big name movers in tech, so we'll want to take a look at that. Bonds added yield today, so they're down. Amazon and Netflix, a little bit of a correction. There's probably a lot of people waiting to buy Netflix on this drop. A lot of people think this market going higher. Home Depot down $7, yet Lowe's is coming out with a lot of forward guidance. I saw that taking place. Costco came out after the market, and they're down several dollars. So you got to keep your eye on that one. And as good as their numbers were, and I think they were excellent, it's almost, like Adobe in them. You know, if you don't hit what you're supposed to hit, there's problems. And, then you get people saying, well, Adobe, all these other services, these AIs coming up, what do you need that for? Have you ever had Adobe Premiere and tried to use anything but it for certain things? I wish you the best. I'm sure you know more than I do. We use Adobe here. Rivian doesn't give you a chance back in so far. And the movie theaters, well, we'll see what happens, but they certainly are getting closer to 4 than they are 5. Now, we had CPI numbers today, and before I get to Oracle, and I just wanted to bring that up, the numbers were hot again. And hot is an interesting term. Warm, I don't know, but I thought they were hot. They came in more than the trade was looking for, but how much weight is it going to get? It depends where you looked and what they were. If you stripped out eggs, which was all over the internet today because egg prices were up so much, that's one thing. But when you looked at some of the other areas, they weren't. So it all gets weighted around, and you have to see what it's going to do for the PCE. And I read reports already. The PCE will be just fine. The Fed probably is doing the calculations or has done them already. And I don't think there was anything today on the PPI that will stop the Fed from a 25 basis point cut come Wednesday. Now, if you looked at the Fed watch page, up to 98% probability that the traders, that's how they're betting that it'll happen. Always be careful. You get to 98%, 100%. Yeah, it can happen, but is it built into the market? That's what you don't know. Tomorrow morning, we don't get a lot of information. We get November import-export price data. We're looking for import prices down 0.2. They had been and were up the month before, up 0.3. So a little bit less. That's going to be good to see. All right. In Oracle, we still have a gap that hasn't been filled. The market's now churning itself near the 170 up to the 180s and just back and forth in there temporarily. The pattern is bearish until you take out 181.38, and when that's taken out, it could signal that the market wants to make a move to fill that gap. The word is could. If I knew, I'd bet the house. I don't know, but that would be to me my thought process. If the market keeps falling, the possibility of getting to the 100-day average is open. Where's that friend, the Bollinger Band? Well, guess where the market is stopped? Got under it, came right back to it, and now it's churning away on it. Doesn't tell me a story, but other than the market is paying good attention to it. Other traders see what I teach you here, and that's where the pros are taking some monies off the table. Now, if you're going to go short, I do not teach to go short Bollinger Bands. And the reason is you only stay under them 5% of the time if you do the math of it. That's the theory of how they're built. It's like when you get up and over them. Look at, boy, are you wrong, Ira? And then you get your pullbacks. Well, flip-flop this can be the easy way. So we'll see what it does from there. And you're oversold. Oversold at a Bollinger Band. Yes, you could get down from here another $11, $12. I think it would be difficult, and I think the market, if you get over 180, 130, could catch some of these people that are getting a little too bearish possibly. Still haven't seen XRT give up on the bullish embedded reading. Now, if it closes under 79, that would be a different thing. I don't know why I've got that other writing on it. It's at 80.77. You'd have to close under that. It comes alive again, in my opinion, if prices can clear 84.71. And understand, you're at 83.42, so everything's very tight together. CrowdStrike, I still think it needs to build and do more work at the 18-day average of closes. Could I be wrong? Of course I could. You got a higher high and lower low, and you just seem to want to hang in that general area. Rivian's not giving you a chance, but you'll get one, I think. If you can get back under this low here, it might fire the market up to come here. What's the bullish thing going on in the chart? We'll play a game. Tick-tock, tick-tock, tick-tock. You just had a first crossover of the 18-day over the 200. Now the 100's waiting. This market's making a major statement on its moving averages that the market is probably not going back down to these lows again, and that it's a new type of chart that we're going to be looking at. I am friendly, as you know. I was real disappointed in China. Again, but I'm always disappointed with China. As you know, I don't believe that they feed us the right information or true information. And if they do and they don't like it, they stop reporting it. It's that simple. You can't argue that. It's the way it is. But today they finished their two-day conference meeting, and it's at this meeting that they take everything they've agreed to and they set the plan as to how they're going to do it. They also set up what their target goal is. So the one thing that they did let out, is word came out of it in the state-run press, it doesn't look like they're going to change from a 5% overall goal. What they didn't do is offer any ideas on how they're going to get there, and the market immediately hit the gold market negative, silver market negative. Copper hung in there for the first couple of hours, then it went negative. Energy prices did sell off from highs down a bit. They came back by late day, but they didn't close higher. They were just hung in there. Toll Brothers, okay. They're riding the lower band. The market tried 2 days in a row to do something with the 100-day average in it, and it gave up. So what's going on here? Well, the market's seeing that the Fed policy is changing right in front of you. We're not talking that every meeting in 2025 you're going to get another cut. You're not talking of taking interest rates down to 3% anymore either. You're hoping that you can get them to 3.5% as a neutral rate. That's what the market's hoping. And anything to do with mortgages, they're feeling the pressure. Same in XHB. That is the reality of the situation. You don't have to agree with me, but it's the reality. Does it mean homes won't be sold? No, people are always buying homes. It does mean it's harder. What didn't have an impact today bothered me. I saw that we're talking immediately, and go to Bloomberg, you'll see talk on the SALT package, where they want to now kick it from a $10,000 cap deduction to $20,000. Not unlimited, doubling it though, because let's face the reality. How much have homes gone up since that was taken down to $10,000? What have your mortgages done? Well, for some of you, the mortgages have gone down because during the pandemic, you were able to lock them in. But what about the young people today that didn't have a home and now they want to go buy it? It's not easy to buy a home at 6.5%, 7% mortgage. And It's not easy to buy a home when all you read is that every single report we get out of Case-Shiller shows the 20 metro area as a whole going up. Yeah, we get pockets where they go down. Try to go out and sell some of those condos in Florida now that are 30 years old, and they've just gotten hit with what they have to do to replace them. There are people walking away in those condos. They're just going, it's not worth it. And buyers are waiting because the land is worth more than repairing the building. So you take it down, you put up a brand new building. That's the only way out. But some people, retirees and so on, this is their life. Where they're going to move when they get that few bucks that they get. I mean, there are problems. Just understand, this is the cycle of Florida. I had a home there. I came in on one of those swoops down. And now I lived in the Art Deco district. I don't know if that district has to follow these rules. If it does, those buildings, number one, you can't take them down. They're protected. Number two, it costs a fortune to retrofit them. I mean, a fortune. I was president of the building. I know what I'm saying. Lower highs, lower lows. We'll see what the market does down there. XLF, lower highs, lower lows. Again, here's the interesting thing. This market did very well on rising rates. We're seeing that rates have recently held. You're around 4.3 now in the 10-year, a little higher than that. But you're not getting the bounce, and you did before as the rates were moving. We'll see what this does for the financial services, but nothing bullish. This morning, when I was putting out my morning subscriber video, which I record right around 9 in the morning, I kept pointing out chart upon chart, and I told people, I said, I realize what the stock indices are doing on their bullishness, but as we go into some of these ETFs, nothing here is friendly. Doesn't look friendly to me. Gold has been, but what did it do yesterday? Not today. It hit the Bollinger Band. And I realized there'll be wise guys, you're wrong. Okay. The simple fact of life is you generally hit these bands and they do something. They can run them for a bit. This market's not trying to run it. So maybe a correction coming back down to 245. I am not at all bearish gold here. I think that if inflation's sticky, I think that's a friend to gold, not an enemy to gold. And I think everything that President-elect Trump will do when he's president is an inflation number to it. That's what I believe. I didn't say that's bad. I just said that's what I think will happen. I think his policies are going to be good for America over time. We'll see what the market wants to do there. Silver, look at how the Chinese situation set it on its heel, right back to the 18-day average. Like gold, you don't have to agree with me. You get to those bands, you get to those bands, you get to the band, you get to the band. It is not a bear signal. It's a signal to take money off the table. You don't have to follow me, but that's what I believe. In copper, you just got up 3 days ago to the 200, the upper Bollinger Band in the copper. Go back on my video, and what was I talking about? I said, I think the smart money is coming out there. I didn't say go short. No way. I do think you hit those numbers for the first time, and a lot of systems say, let's come out, we'll see what the market does next. Now you're void of a trend. You have a lower low, higher high. And in addition, I kept saying, why don't we wait and see what China does, because they consume half the world's copper. I think it's fairly important that they tell us their stimulus plan or lack of it. BND, well, you've fallen apart. So now the first major support is 72.91. Follow me. You lost the embedded reading on Tuesday. The odds were the market will go to the closest main moving average before it gets up there. That's all that I care about. Nothing else. UUP. Churn, baby, churn. That seems to be what it's doing at this point in time. It wins on most accords. It's going to have the Fed not being that overly aggressive, so interest rates stay relatively high. The economy is super strong, and we have a superstar coming into the presidential office in many people's minds. many people's minds, that is going to come up with all kinds of economic stimulus plans. We'll see. But that's what you're dealing with, and none of that to me is bearish on the dollar, but it is still bearish on the euro, and I call what Ms. Lagarde did wrong today. I think she should have gone, as the Swiss National Bank did, to 50 basis points. She even removed in the comments at the bank the word restrictive. They don't want to maintain a restrictive policy. They want to loosen up. So why not go bigger? Get it behind you. Get the economies going. People do different things, but guess what? These people are a lot smarter than I am, so they know things I don't know, and I give them credit for that. It's easy for me to criticize. It'd be very hard to run those ships. Let's give credit where credit's due. All right. If you'd like to see what we do in the morning, because that's where the meat and potatoes are. This is the salad before you're having dinner. The meat and potatoes is when I do the morning futures videos, the stocks and the ETFs. I cover everything for you there, give you trade ideas galore, what I think is going to happen, why it's going to happen. And that is where I track trades when I say, buy here and it gets a fill, or sell there and it gets a fill, whatever way. I track it until I'm not following that trade anymore. I think that's the fair thing. No, I don't publish track records. No, I'm not interested, if you will, in managing anybody's money. Not one person, not interested in it. What I am interested in is showing you what I'm seeing, why I am, and the goal is to give you trade ideas. And if you can accept that that's the goal and how we do it and how we track it while those trades are open, this may pay for you. So give it a try. Go to iraepstein.com under the word research. It's iraepstein.com under the word research. Read about it. Give yourself a try. Say you bought yourself a little Christmas gift for $7.95 or $8.95, not hundreds. Those dollars, give it a try and see if it makes any sense to you. I'm Ira. You take care.